the trade setup. So I think it's very easy to call, it's easier to call a relief bounce, but very difficult to call it a trend. I mean, nobody out, I think, can put that out as well. In fact, most global notes, I was reading the HSBC note this morning, and they are saying not just for India, but for various Asian economies, that domestic facing sectors should be at the forefront, reduce the exposure to globally linked sectors. Now, Tamanna will talk about this in detail, but you will see OMCs likely showing a bounce back from yesterday's late hour sell-off. So keep an eye out for oil marketing companies in particular, not the entire oil and gas space. And the only point is IT is down 30% now from the December peak, but most people are saying that sluggishness is still not ruled out because it is a globally linked sector and particularly linked to the US. So keep an eye out for that as well. Now, should we take it to the derivative cues to try and understand?
Just want to add some details as well before we get to the derivatives queue, because just look at a few more cues that you need to watch before the opening. Despite a 2% recovery from the day's low, the market is remaining under pressure. Weakening technical indicators and global concerns will be at the fore. Now, even if you are seeing a pop in the morning, you have to look at what the direction looks like. There was buying interest at the swing low yesterday, 21,743, and the market's direction depends on key support and resistance levels coming in. A decisive break below these levels could be a further downside movement. But look at the support coming in. There's a deeper support zone near 21,700, where the market found support multiple times yesterday. On the upside, resistance is observed in the 22,350 to 22,550 range. A clear breakout above this level may bring in buying momentum, and that's what you need to watch out for. Nifty and Bank Nifty are currently in a downtrend with key immediate support at 22,000 and 50,000 respectively. So which is why we need to add all of this information to give a clearer picture to our viewers. Puneet, on the derivative side as well, we're looking at a gap up, but the sustenance is key, isn't it?
Well, definitely. And, we had that gap down yesterday and multiple levels broken in the session yesterday, the highest intraday fall since March 23rd of 2020. But essentially on the Nifty, while we are seeing a gap up opening, it'll be important to see where we can sustain that. The next support level is somewhere around 22,400 as of now. And that's, of course, a steep jump from the 21,700 levels that we saw yesterday, which was a key support again, just to add some positive aspect to yesterday's trade. Now, of course, we've seen an increase in open interest, but that couldn't be subjective. That could be subjective essentially for both the Nifty as well as the Bank Nifty as well. But I just want to put out the Nifty open interest distribution, both for calls as well as puts, and it was a very interesting trend. We saw the maximum put option interest yesterday at 20,650. Now, this is the maximum put option interest that we've seen yesterday, and that might be a one-off if that happens, but it's essentially one there. We've seen a lot of put build up at the 22,000 level, of course, which was yesterday as we look at it. While on the call side, we are still at 25,400, but there won't be any new call options initiated at this level. 22,700 is the other level that you need to watch out for in terms of the calls aspect in that aspect. Now, open interest gainers and losers, while it is back-tested data, it is historical data to look at. If we can pull that up as well going forward. For stocks specifically, the open interest gainers and losers, what I'm talking about. We've seen short build-up across stocks yesterday. It'll be important to see if some of them sustain. Siemens yesterday, of course, was because of the demerger aspect. But we've seen also long unwindings across the open interest losers as well yesterday. Of course, the auto space was definitely in focus. And finally, the delivery data. Now, in terms of delivery data, what you need to watch out for is that it was very low in terms of just 30 to almost like 40% of delivery data, and all stocks were lower, which essentially would mean that it was a higher intraday movement yesterday, and it could not signify that we are having a change in terms of perception of these stocks, at least in trade today. But definitely one of the key levels to watch out for, at least on the Nifty, will be the 22,400 mark.